Welcome back. Now to our next conversation. Well, 2022 definitely been a tough year for investors globally, with inflation causing a rethink for most investment classes. Let's get a review now with Mr. Ayodeji Ebo, MD and Chief Business Officer, Optimus by AfriInvest. Join us via Zoom. Great to have you in the program. Good morning. And compliments of the season.
Good morning. Compliments of the season, Laddie.
All right, so which investment class would you say gave, some investors a white Christmas, with respect to returns this year?
Okay, thanks. I think the class of investors that I would say carried the day, those investors that invested in dollar-denominated assets. So trying to look at the trend, if we recall, looking at the parallel market rate, which is what is also applicable for investment, opened the year at 465 naira to $1, and based on market rate now is around 750 naira to $1. So for investors that invested in dollar mutual funds, dollar fixed deposits, those for euro bonds, a bit of volatility around that space. But I would say looking at their return should be over 60%. Because the naira depreciated in that segment of the market by about 37%. Then the second class I would refer to is those that were also able to take a bit of risk within the fixed income space, that invested in commercial paper because of the premium that it comes with relative to treasury bills. And I would say lastly is equities. But for equities, it's also going to vary depending on the sector. So when you look at it based on sector, the oil and gas sector rallied significantly, especially for Seplat, rallied close to over 50%. And you also look at the ICT sector, MTN, Airtel Africa, though Airtel Africa shared some weight towards the end of this year. But they also gained significantly. And within the banking sector, that experienced a lot of volatility. Was I think I attained that year low at around October, but we saw that rally in the last 3 or 4 weeks for some of the banking stocks. So by and large, I think it's when you look at it's also going to vary based on your portfolio. And earlier this year, we had also recommended that there should be more exposure to fixed income, dollar-denominated assets, followed by equities, because we all know that all the expectation as we walk towards the election, there will be a lot of uncertainty, and with the absence of foreign portfolio investors and also in the equities market, also impacted the performance that we saw. So I would say in summary that the winners or the winner would be those that took that step to invest in dollar-denominated assets.
All right, on the global front now, obviously we saw some, the equities that didn't do well on the global front, from like the tech-heavy equity markets like the NASDAQ and, some other categories. They didn't do well. Some are down about 65% year to date, some 70% down. Do you think the bottom is in for those kind of assets, or are we close to the bottom?
Okay, thanks. I would say that looking at the equities global market, where we should be close to the bottom, however, still with a bit of caution. We expect that the US Fed begin to reduce the increase in the rates. So if you recall this year, the Fed rate opened at 0.25% and will be closing the year at 4.5%. So that significantly affected rates in the global space. And with also the moderation we're expecting in inflation and the potential recession, which would mean that they will need to also encourage like an expansionary monetary policy, that would also boost equities. But it's still susceptible to a lot of global decisions in terms of geopolitical politics that would still have its impact. But we would recommend that investors that have that long-term investment horizon should begin to also take position. So if you look at the trend, even the US market, the S&P the Nasdaq, Dow Jones, if you look at them the last 50 years, most times when these are periods when people are able to take that risk, benefits, because we would expect that towards the end of next year, there should be a rebound, and they may also come to surpass their previous high, which we've seen when you look at the trend. So for investors, I believe that it's also time to, because looking at the correlation between the fixed income market as well as the equities market, as rates also begin to taper down, that would also be a major boost for the equities market.
And obviously, this year we saw, the commodities markets, also shine. We saw the commodities like natural gas, oil, grains. They did well. They all hit, highs, new highs this year. Do you think going into 2023, these commodities will still shine?
Hey, thanks. We need to first understand the reason why we saw that positive outing for those particular sector. You look at the oil and gas, because oil and gas sector as well as the grain sector, because of the crisis in Ukraine, between Ukraine and Russia. Yes, even if the crisis may still be prolonged, which is still ongoing, we don't expect that sharp rise in oil prices again. There will be a bit of moderation. We don't expect it to increase by that percentage that we saw last year. So we believe that there may be a bit of moderations. Economies are looking for alternative, because it wasn't an easy time for most economies, given that rise we saw in crude oil prices as well as grain prices that impacted significantly on even inflation in some of those economies, and alternatives are being sought for now. So we don't expect that amount of positive performances, but we still feel that the likes of the metals, gold, those that suffered significant downtrend this year may go move in the positive direction in the new year.
All right, let's hope investors have it easier in 2023. Thank you so much. Thank you, Mr. Ayodeji Ebo, MD Optimus by AfroInvest. Thank you for giving us your perspective today. Thank you, and
always
compliments of the season.
Same to you.
All right, so there you have it. We're looking out for 2023, see which investment classes are going to shine, come 2023.